soybeans. So on that basis, where do the commercials want to trade? Here's the big question. Where do the commercials want to trade? Well, it's got to be one of those areas, right? It's going to be one of those, one would imagine it's going to be one of those price areas. So if we go to the charts, this is obviously yesterday's chart, because obviously this is the charts that we want to be watching, right? So based on yesterday's charts, would you all agree that the NYMEX high, I know it's a little, this is just before the NYMEX high, but it's also this retested high up here. Would you all agree that the day high was here? Would you all agree that the NYMEX high was here? Would you all agree that the NYMEX low was here? Yes, everything's good, isn't it? Everything is good. Would you all agree that the NYMEX close was here? Would you all agree that there is a very, very, very substantial amount of paycheck liquidity here, 70 evens? Where do you see the biggest liquidity? As a trader, as a commercial trader coming into today's markets, where do you see the biggest liquidity areas? It's pretty obvious, isn't it? Would you all agree, without any question, that the biggest liquidity area is this area here? That includes the NYMEX high, the Brent oil high, the day high, the 70 wholesale price level, and everything else. Would you all agree that that's quite clearly the biggest liquidity area by a mile in terms of the cascading stops, in terms of the levels that you would all have on the screens? It's incredibly obvious, isn't it? Isn't it? Is that incredibly obvious to anybody, or is everybody oblivious to this? It's incredibly obvious, right? So therefore, when you're asking me, where is this sell going to appear? Where is this commercial sell going to show up? And we come into an area like this and we see that huge volume spike on the cash open. On the cash open. Is that not going to be a signal that there is a high probability of a commercial seller showing up at that price? Is that not possible? Is that not something that you'd look at and go, damn it, that's exactly what I'm seeing? Why would that be a commercial seller showing up at that price? Well, if we look at the shape of inflation break-evens, does anybody think inflation break-evens are lower today? Yes, so everybody knows inflation break-evens are significantly lower, which is suggesting that oil prices should be selling, not buying. So that's the first thing. Would everybody agree that as the US inflation break-evens opened up today, it went a little bit higher? Yes, it did. It opened up a little bit higher. But we've still got the inflation break-evens coming in from yesterday that's had the whole run into this area before the 230. Remember, this top edge was forming in real time. We can't wait for the US Open. What about the euro? Is oil expensive or cheap? Is oil expensive or cheap? It's expensive, right? It's maybe cheap at the bottom edge, but it's expensive, very expensive at the top edge. So oil's incredibly expensive. Is that a good cause for selling? Yes, it is. What about what the bonds think of this? What do the bonds think of this overall? Do the bonds suggest that oil's maybe a little bit overpriced if we're using the bonds? Yes, they do. Oil bond yields are dropping. We can see that bond yields are dropping, which suggests that oil prices at higher levels are probably going to be a sell opportunity, right? Yes? Absolutely. Was that a good reason to buy the bottom edge here? Yep, it was. Was that a great reason to sell the top edge here? Yes, it was. Absolutely. What about calendar spreads? What about calendar spreads? Micro-wise, micro-wise, we don't really see much. Macro-wise, what's your view of the macro on the calendar spread markets? What do you think? Is there a really good excuse to be selling oil into the $70 a barrel? Yes, there is. Yes, there is. So there's everything. Every single piece of the jigsaw puzzle said that this was likely to be a commercial sell top edge. Every single piece of the jigsaw puzzle, not one piece. Yields were lower, the curve was lower, the inflation break-evens were lower, the euro dollar was lower, the calendar spreads were lower. We had a wholesale price, we had a previous day high, Brent oil high, we had a WPA 70 wholesale price, I've already mentioned that. We had the WTI oil high of the NYMEX high was there as well. We had everything. But obviously we still got to work really hard to get that trade on. And we also had that huge commercial activity at that price, didn't we? So when we understand that that's what happened and we understand ultimately what went on, one of the things that we obviously then look at was this, what happened here, right? Remember we talked about that huge commercial seller that came in at that price, and then you see what happened all the way down to this price here. So not only did we have the bonds, the yield, the inflation break-evens, the euro dollar, the calendar spreads, the day highs, the Brent oil highs, the overnight highs, the WPAs. We also had all that commercial sell activity at the same time. And we lent against that commercial sell, as you know, and that was the outcome from the trade. Absolutely superb and incredibly easy. Incredibly easy, isn't it? You just went through the process, the logic, the understanding that selling a commercial top is going to be a tough job, but if we see commercial sellers coming in, it makes our job a hell of a lot easier. We saw commercial sellers coming in, which makes our job a hell of a lot easier. And then we managed to pick up that sell trade off the highs, and as if by some sort of crazy magic, the sell trade off the highs simply destroyed the downside. We had that vacuum trade in the background that closed. We got down into the last demand area, which was at the lows here. You can see the last demand area right there. There's the capper price, one would imagine. That's the price we got to. So you can already recognize the last demand that we were looking at here. The accumulation, which looks like, surprisingly enough, looks like accumulations, doesn't it? And it looks like every accumulation we've ever drawn on a screen. There's the accumulation setting up. We even had an art trade, an acceleration of the reverse trend line to give us the timing for that big sell. See how that trade sets up, guys? We had the capper price. Initially, the capper price we'd have thought was probably about here. That seems to be the capper price. We had the break away from the capper. We then had the safe trade, the one that we talked about earlier. We had the safe trade for the extension down to the bottom edge. We had a capper top edge. We had a top edge price coming in just about here. Because we've got a top edge there and a capper that came in here, we have a measured target, which actually was very close to the bottom edge target price, right there. How amazing is that trade? I can't make it any better than that, guys, because it would be impossible. I couldn't draw a trade that's any better than that. Now, in addition to which, we obviously had also some ideas about that sell, of course, because this is the day high, remember. This is the day high. Look at the volume. Does that not say something, Alan? Does that not shout to people saying, look at me? Massive volume coming in, pouring in on that one candle right there. And that is in the area we wanted it to pour in on that candle. And how did we know the price would probably stop there? Well, did anybody bother doing a measured move? I'm sure Cliff did. Did anybody do a measured move when we completed that bracket swing from there to there? Yes? No? So when we completed that bracket swing here, does anybody see where the target price was, guys? Anybody? Anybody know where the target price is for possibly a measured move sell? Isn't that interesting? The target price for the measured move sell was exactly where the previous day high was, exactly where the biggest volume of the day was, exactly where we got the acceleration of the reverse trend line, exactly when we got the selling coming in on yields, exactly when we got the selling coming in on on inflation break-evens, exactly when we've got the euro-dollar shorts, that is a walk in the park, guys. I'm sure you did, Cliff. Absolutely. I know it's something you always look for. But the point is, does everybody look for it? Is everybody aware? We keep asking you to put these levels on your charts dynamically in real time, not after the event. You, if you look at your charts right now, you should have a measured move on the upside and the downside right now. If you look at your charts right now, you'll know that that's either true or false. Either you're up to date with your charts or you're lagging behind. You're not aware of what's happening. Have a look. There's 98 people in here. I can almost guarantee that 90 of them haven't got those levels. 8 people will have those levels. 90 will not. I can guarantee the 8 people that have those levels will be making nice, consistent money. And the 90 that haven't will still be making mistakes because they forgot to do something. They've been behind the curve. They'll only see it after it's happened and they'll go, damn it, why did I not have that level? Why did I not have that level on my screens? Why was I unaware of this target price here? Why was I unaware of that last demand area here? Why was I unaware of that sell location there? I am not doing what I need to be doing to be successful. I need to fix it. I need to sort something here. Comprende? I'm right, it's comprende.